What's going on, guys? Welcome back to the channel. Welcome back. So a lot of you have requested more content on volume spread analysis. I do trade daily, and I do use this in my trading. So a lot of the daily trade videos you see me put up, you'll see me going through it in real time, what I'm thinking and how I'm applying it. But there is, a little bit more to it, and there's actually, I could make a part 3, and I probably will, if this is well received also. So just like anything, supply and demand, I'm going to give you guys what you want. If it's helping you and you're saying, tell me more, I'm going to tell you more. So this is what it is. Volume spread analysis part 2. So we talked about effort and result. Okay, we talked about putting in a big effort and getting a big result. So that's what's called harmony. You have that here, right? Call this harmony. Harmony. Okay. Big effort from the Bulls, from the Bears, big spread. Opened here, closed here. Okay, that's harmony in the movement. All right. This same move, okay? Big spread. But look at the effort that it took. Okay, this is not harmonious. Okay, so this, you can interpret this one or two ways. Okay, you can say this little bit of volume here created this big spread. Bears are really strong right now. How I interpret it though is that there wasn't a lot of bullish participation in this candle. And if you see my trading videos, you'll hear me talk about participation a lot. You don't want to see too many of these types of situations where you have a big spread and you have a low volume that produced it, because what you have is you just have aggressive selling. You just have sellers coming in and saying, I'll accept lower prices, I'll accept lower prices. And what they're doing is they're flushing the market. They're forcing price down to where the buyer's orders are. Okay, they're forcing price down levels to where there's limit orders placed by buyers that want to buy. Okay, does that make sense? So there might be, 10 orders here, 10 orders here, 10 orders here, but every time they sell, they're selling 20. So every sell order they pump in knocks it down 2 levels, knocks it down another 2 levels, because the buyers are passive right now. They have passive orders. Limit orders are passive. Let me write that up here so you guys can internalize that. Limit orders are passive. Okay, they don't do anything. Just think of them as they just sit there. Okay, just think of them as they just sit there. It's the best way I can put it. Market orders, okay, are active. Okay. Market orders are active, which means when you go and execute an order to market, you're telling the computer, I want this stock or this asset so much, I'm willing to pay whatever. Get me in at the next available price. Or if you're selling, I need my money, get me out at the next available price. Okay? So if you are all the way, let's do this. Let's do this here. If you're all the way at the top of this bar, okay, and you are selling, you're selling at the top of this bar. You have shares sitting up here. You have shares and you're selling. There may not be an order to match the quantity that you're selling until much lower. So you sell up here, let's say at $5. There may not be an order to match you until down here at $4. So what happens to all of the price in this area? Well, there's no one there to trade with, so it's skipped, right? It's just skipped over. So you've been able to create this large spread because there were no buyers interested in this area. So you've created this large spread, but you haven't really put in a lot of volume, all right? So the market's really one-sided. So you can look at this as, yeah, the bears are really strong, but I look at it in a different way. I say the bears didn't really participate. I want to see strength, participation. That's what I want to see. And that's kind of what we get on this candle here. Let me try to get rid of some of this. This only lets you backspace so much before it forgets what you did. So let's do this here. Let's do that. Hold on, I'll be back. All right. So this situation, though, is the opposite. You've got a low spread, right? Low movement, where you got a lot of energy put into this bar. Now, this is the opposite of this. This is more of what I want to see if I'm going bearish, because what I know happened here was I had a lot of participation. Okay, and I was still able to bring the price down. Okay, this means that buyers stepped in. I was still able to bring the price down, and in this particular candle, I was able to close at the dead low. There was no wick like you see here. Okay, so this candle could have formed here, fell a little bit, chopped around in this area for most of the life of this candle. And then the bulls or the bears at the very last minute came and pushed it down to lows, shocking the bulls, shocking y'all. Okay, so this shows me that this has a lot of participation from both sides, because if you would have had a situation like this, you would have had someone, a seller, with a lot to unload, but no participation. No one was willing to buy it. But here you had sellers with a lot to unload. Buyers were willing to buy it, but the sellers still had more after the buyers were done. Does that make sense? So in this scenario, you have, let's say you have limit order sitting below here. Okay, they're absorbing this right here. They're absorbing the selling as it's coming down toward the end of the candle. But at the top of the candle, let's say you had 50 shares to sell, and on this first go of it, someone takes 50 shares from you, but they don't take it to you from right here. They don't take it from you till right there. Okay, so you say, okay, I'll sell more, 50 more. They match you here. Okay, and then you just start pumping sells into the market. You start pumping sells into the market. You've probably got limit orders that are resting in this area here. Okay, you probably got limit orders that are resting, because this is the open of the candle. This never traded above. So this never traded above for two reasons. For two possible reasons, I should say. There were no aggressive buyers, because we know price only moves up or down based on the aggression of the other side, by them willing to pay a higher price or willing to accept a lower price. So you know that there were no buyers at the beginning of this candle that were willing to pay a higher price. Or they were, but there were sell limits sitting up top here, okay, that they were selling into, and they could never get over it. All right, so limit orders have the potential to stop a market movement. Okay, think of them like a basket. They're catching all the demand. Okay, or they're like a ceiling. They're stopping all the supply. So if they're like a ceiling or a floor or a basket, they're sitting, they're resting in the market. They can't move the market, because no matter what, you're asking to pay this price right here. Okay, that's what a limit order is. You're saying, get me in at this price or better. So you never take initiative and go up to buy more. Or if you're a seller, a passive seller, your sell order is here. Your sell order is on the ceiling. So every time price comes up there, okay, the buyers are aggressively buying. They get to your block of orders here. This is your block of orders, okay? And then they start working on your orders, and they either can't get there, they can't get in there, or they eat up a little bit and then they fall away. As they fall away, when other sellers realize they're not going to get a higher price, because whoever is up here aggressively selling, they start aggressively selling, and that's what drives the price down. Okay? And the same thing happens with buyers when they realize, okay, the effort we're putting in is not going to get us up through this order block right here at the top. they back off. When they back off, it leads to an even further increase in selling pressure. So you get a situation like this where there's more supply than demand. And what you guys got to realize is this happens so fast. Okay, we talked about algorithms and computers. This happens in milliseconds. Okay, just watch the ladder whenever you trade, and you see orders flashing in and out, because the computers are kicking on and off. They'll see someone start a big sell order or a big buy order, and if they've got inventory to match it, they'll come into the market real quick. And when that other algorithm cuts off, they'll cut off, and you'll see orders disappear and appear. You'll see it all the time. Okay. This situation here, you have a lot of effort, and this is your result. Now, let me ask you something. If you are in any direction, do you want to see this? It depends on the candles. To me, it depends on the candles that followed. Okay. This is a doji candle. It's the definition of indecision. Okay. The buyers and the sellers were equally matched. Depending on how this formed, though, this is why you got to really be watching your charts. Did it run down first? Because this is a green candle, so we know it opened here and it closed here, because the close is high, or the close is higher than the open. But did it run down when it opened, come back up, run up when it opened, and then close in the middle? Or did it run up first, come down, come back up, and then close here above? Because if you know that, the nuance of that, you know who controlled this bar for real. Whoever had the last word controlled this bar. Okay? The last word would be if it traded down, it opened and traded down, and then at the low, buyers came in and pushed it all the way back up. They pushed it past the open. Okay? Pushed it past the open, but then the bears came down and pushed it here. Bears had the last word, even though this is a green candle. Okay? So when the next candle opens up, you would expect that bearish momentum to continue into the next candle. Does that make sense? Okay? Other way around, if it pushed up here, okay, the bears pushed it back down, then the buyers came back and pushed it back up a little bit higher than the low. The bulls had the last word. Okay, so you would expect the momentum from the low to be coming up, and this next candle to be green. Okay, was that helpful to you guys? So watch your candles. How they form is very important, because this could be a doji. Yes, it's indecision, but what side had the last word? If I'm trying to analyze volume, I need to know how this candle formed. I can't just walk away from my computer and come back and look at a few candlesticks, because I don't know how the hell they formed. Okay, so think about that when you trade also. This example here. This is all of these dojis. You have the importance of knowing how they form. I can't stress them enough. So this one here, we know it opened here and we know it closed here. So this is the open. This is the close, because green candles, the open is always below the close, right? But how did it form? Did it open here and sell down first? Was it pushed all the way back up to close at its high? So think about how bullish that is. The candle opens. Okay, the candle opens. It's pushed all the way down by the bears. At one point, this candle's solid red. It's fully bullish, or sorry, fully bearish. Okay. Then the bulls come back, maybe mid-candle or right before it closes. They push it all the way up to the open, and then they have more strength to push it past the open. Okay? Now, if you're looking at the spread of this candle, this is harmony here. Okay? You're looking at the body of the candle for harmony, but you have to also look at how it formed, because if it formed differently, they created a big spread. They had to overcome all of this selling and buy it back up to the top of this candle. So that is a big spread. This is harmony. Okay. So you can't just look at the bodies of the candle and go, oh, that's harmony. They're in harmony. They're, effort and result. Because if you don't know how it formed, you're just going to be lost. Okay. Now, if it opened here and ran up and then ran down and then ran back up, okay, and that happens. That's even better than the one that we just went over, because they showed strength twice. The bulls showed strength twice, okay? So they rejected lower prices twice. That makes sense? Okay, so now we're going to go to this other one here. This one here, same situation. We know it opened here and it closed here because bearish candles open. Their close is below their open, right? So how did this candle form though? Did it push down first? Was this candle solid red first? What was the volume like when that candle was solid red? Was it here? Was it here? Was it here? Was it here? Okay, you only know that if you're watching your chart. Okay, if it closed and opened there and then pushed up, or did it do this? Did it push all the way up first? So at one point this candle was solid green because it opened here. So this candle was solid green, and what was the volume? Was it this much volume? Was it this much volume? If it was this much volume, you got very little, a lot of spread on very little movement. Same thing you had back here. And what do we think of that as now? Lack of participation by the bears, right? Okay, if it's half of this, you probably had a little bit of participation, so you feel a little better about it. But the end result was that it was ultimately pushed back down and then pushed past the open and lower. Okay, so the bulls not only wanted to beat the bears, they wanted to beat them real good. They wanted to let them know, hey, we're here. Back off. Okay, you only know that if you know how it forms. This is similar to this. They're both dojis. This is called like a long-legged doji. They're both dojis, but you have so much indecision here. You have so much indecision. I'd say that this is actually more balanced than this because they tested both sides of the range. Okay? And once again, we don't know how it formed. We only know where it opened and where it closed. We don't know if it came down here, went back up, came back down. We don't know if it did one of these, if it came down, went up, came down, went up, came down, went up. We don't know that. We don't know how the battle played out unless we're watching this. Okay? But what we do know, what we can add to this, is there was a lot of participation in this, and it was on both sides of the market. So if I'm trading and I'm seeing this and I'm thinking about entering on this, okay, I better have some candles in the past that are giving me a story to where it's going to tilt in the favor of one side or the other. All right? Because this, I wouldn't feel more comfortable if this was red. I wouldn't feel more comfortable if this was red. Because it's telling me the same thing. The market is directionless right now. For this 5 minute or whatever candlestick time frame you're trading, this was not, there was no clear winner here. But you can get an idea based on how does this volume relate to the volume before? How does it relate to the volume before? How does it relate to the spreads that you've seen before? You have to put that all together to assess this candle. But most of the time, a candle like this just means wait, just stay out. You can't pick a winning side yet because no one's winning. Okay? Yeah, the bears have a slight advantage, but if they were really or the bulls have a slight advantage, but if they were really in control, they wouldn't have suffered this. Okay? And they wouldn't have suffered this. At one point, this bar was green completely. Okay? But it was sold back down. At one point, this bar was red completely, but it was bought back up. So what side took control and when? It's very important that you watch. So this is just a diagram of how this could play out. We're going to go through this real quick. This video is already long. My videos are so long, but I hope you guys like it. I hope you guys don't mind and you watch it to the end. And if you like and comment and interact and subscribe, all that stuff, I really appreciate it. But I try to, if I make a long video, it's long because I want to get everything in my head out onto the video. So harmony here again, big spread, big volume. Okay, now we're gonna touch on something else, and this is what I'll cover a little bit in the next video. You want to see a goal reached. Okay, and by that I mean you want to see what were the bulls and bears trying to do. If you're approaching a level with heavy volume, you're buying, 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 buying. You're breaking above a level because you know if you get above a level, there's not only stops above the level that are going to trigger and assist you in your rise or your fall or below the level, whatever direction you're going, but also you're gonna reach a result. Okay, so you want to see effort and you want to see result. If I'm selling into a 20 period, or this can be anything, this can be a 20 period, this can be a trend line, this can be a VWAP, this can be a 50, whatever resistant, whatever you want to call it, okay? Whatever you use, you're looking for a reaction from. If I'm selling heavy into this, my intent is to break through this because below here, there's orders that are going to assist me in going in my direction, okay? Because if people bought at the 20 previously, their stops are below the 20. So when I come down here, I'm going to run their stops, which is going to make it easier for me to continue down, buy back, take some profits. Okay? Does that make sense? So if I can't meet that aim, if I cannot meet that goal, there's a problem. Okay? So always be careful near, moving averages, trend lines, things like that. You want to see the effort validated by the end result. If my effort was big and it was big and bold and I wanted to break this but I could not, I stopped here, that's telling me that there's limit orders at this 20. My aggressive selling is coming in. Yeah, I'll accept the lower price, but there's an order block here that I first have to get through. And there's no telling how many orders are sitting here, but it was enough to stop this price. Okay, moving on to the next candle, we did finally breakdown. We actually gapped down, and I did this on purpose. We gapped down, okay? So we took out all the orders here, and there were no orders from here to here. There are no orders in this section right here. All right, so we gapped down, and then what happened? We probably ran down, and then the buyers presented themselves. They said, okay, enough is enough, and they started buying back up. They bought it all the way back up. So at one point, this was a green candle right here. Okay, and it retraced a good amount of this candle right here. All right, but look at the volume on here. Look at the volume right here. Now, to me, if I'm reading this live, what's happened is if we open here, we push down to this low, volume to me is probably right here because it's just a continuation of this move, right? When it gets down to here and the buyers come in and push it back up, that's when the volume should really come in. Okay, that's when it should really come in because you want to see them fight back. And then when it gets up here to this and the sellers come back in, more volume comes back in. Okay, and this volume spread really fills out, but it's not really what you want to see going down because you want to see follow through when you have a big effort. A big result, you broke the trend line, you gapped down below it, you broke the trend line. You want to see follow through. You don't want to see them wait and go, let's see what the other side does. Okay, you want to see them continue their momentum. So then you had another one here. This is not really a gap. This was unintentional. So just pretend that this close here was this open, okay? Same amount of volume. Look at the spread in this volume though. Okay, this shows you had a ton of participation. This is how I'm reading it, okay? You had a ton of participation because before you had all this movement. You had all this movement up and down with the same amount of volume. Right here, it opened here, it closed here, but there was no movement. You know what I'm saying? There was no movement. So in this scenario, in my head, what this is showing me here is somewhere along here, maybe here, and then maybe here. Let's do this. Maybe here and here. There's a buy block. There's a bunch of limit orders that are placed there, passive limit orders of people that want to buy. And the sellers are just pounding it. They're pounding it. They're pounding it. They get through here. They're pounding it. They're pounding it. They're pounding it. They get through here. Okay? They're pounding it. They're pounding it. They can't get through it, though. So the bar closes at its low. Okay? It closes at its low. But it can't move any further because there's an order block here. Okay? When buyers see now, okay, we have some support here. There's other orders placed here. I better get my order in or I'm not going to get filled, they start to aggressively buy. Okay? They break through here, or the sellers break through here. They're able to push through, and there's more buyers down here. And then they start to aggressively buy, and they push it back up. On light volume, though, okay? So if I'm looking to get long or short, or I'm looking for, I would probably be bearish here because we broke below the 20. We had a good effort. We broke below the 20. But at this point, I want to see more volume come in to confirm the move. So this is my antennas are up, and I'm thinking, okay, let's look, let's wait and see. Okay, this is a wait and see approach here because it opened. This probably should have been a little lower here. Let's move this down, make it more realistic. Here, move that down there. Okay, so it opened here. It opened at the close of the last candle. Okay. No, it was realistic. Yeah, because this is the open. My bad, guys. So it opened here. It pushed up. Okay. And was it pushed down and then pushed back up? Unlikely. What probably happened was it opened and the bearish momentum continued, and then the buyers stepped in and pushed it back up to the high. So this is, I'm looking now, I'm saying, okay, there's buyers down here. I know that because they aggressively bought this all the way up. Okay. And I want to see this. I want to see this type of participation. Then you have this big participation here with this doji candle. Like we said here, the market literally doesn't know where to go. And let me ask you another question. Would it matter if this candle was green? It wouldn't, right? It wouldn't matter if this was green or red. It's got to be one or the other color, guys. So if it's just a penny lower or a penny higher, it doesn't really matter. It's still a doji. What they're telling you is that they don't know which way to go. And then you get this pattern here on the next candle, but very low volume. So I see this a lot. I actually see this a lot. I see this, and then I see this, and this is telling me that there was so much indecision. Both sides just backed off. They were like, hell, we don't know what to do. Okay? But it opened here, gap down, opened here, and was able to close a little bit higher. So the bulls are a little bit stronger. Okay, the bulls have a little more initiative. Okay, and then you have this big green candle here, gapping down, big green candle. And I put this gap down here purposely because if there's no orders here, it would make sense where there would be no orders until down here. Okay, so the next price would trade down here, and then they would push it up on light volume. Okay, but here you have the same situation as you have over here. All right, which is lack of bearish participation. Now, if I'm at a pivotal area and there's lack of participation from one side, that changes everything to me. Because if you think about it, if you're selling into this 20, you got to believe that you're going to drop way further than the 20 so that you can take profits down below. You don't want to just drop here and take profits, or here or here. If you're selling aggressively into this, you believe that you're going to get to buy it back at a better price, much better price, right? So by the same token, if this side, if the bears are stepping aside here and allowing the bulls to push this up on light volume, okay, they're stepping aside. They're either waiting for a better price, so they're going to defend this high or defend this high, okay, or they're done and they're covering their shorts right now. They're covering from here to here, and they're getting out. Because as the bulls, their aim now is to push this price up because they know above this 20 period, there's going to be the stops of everyone that's sold if they don't get out of their trades. Does that make sense? So they're trying to reach those stops. That is their aim. And they were able to do it, but on small volume. Okay? Next one here. Man, this video is 30 minutes long. Next one here is more harmonious because it opened here. It no doubt sold down as the bears tried to take back over, but it found support at the 20. There's probably an order block down here from this original rally and was bought back up. okay, and then bought back up even more. So this bar is big because you had participation on both sides. So you might be looking at this and you might say, well, this spread is definitely bigger than this spread. But in this particular situation, you have to take into account that the bulls also had to push all the way up from this low because they lost ground. They had to push all the way up and then take this out. Okay? So I would say this is harmony as well. Volume moving up, spread is also increasing or being maintained at a moving average. You reclaim the moving average, and you really reclaimed it twice here to push back up. Okay? And then the next one, the bears just give up completely. I'm sorry, not the bears give up completely. They have a lot of participation, but probably I'd say 25, 75. We'll give it 75 to the bears or to the bulls and 25 to the bears. And they were able to open here and close at the high. Okay, so mission accomplished. They've taken out the high of this candle now. All right, they've hit stops. So whoever was still up here waiting, and the bears up here waiting, they didn't even try to defend it. They broke right through it on heavy volume, or they tried to defend it and they couldn't because the bulls were so strong. They blasted up through there, hit these stops that were probably placed a little bit higher, and were able to push up. Okay, so in the next video, we're going to go over another aspect of it that I look for during the rallies. So we'll get to that in the other video, but let me know what you guys think of this one. I hope you enjoy it, and keep telling me what you want to see. Keep telling me what you like to see, because I approach the market in a lot of different ways. Like I said, it's a toolbox, okay? It's just a toolbox, and I need to know what tool to pull out of the toolbox for the current job that I'm doing, okay? All right, that's it. Hope you guys enjoyed. See you in the next one. Peace.